Welcome to Retire Smart Maryland. My name is Cynthia DeFazio, joined today by Ozzie Culhagil and Nick Innerbichler of Elite Income Advisors. And to our viewers at home, we have a very important show for you today. We're going to talk all about the world of annuities. We know a lot of people have opinions about annuities, sometimes good, sometimes bad, sometimes indifferent. Well, we're going to break down why an annuity can be something that's beneficial in your overall retirement plan. And if you have questions about annuities, well, today's show is just for you. So, Nick, let me start with you. How are you today?
I'm doing great, Cynthia. How are you?
I'm fantastic. Thank you so much for asking. And Ozzie, how are you?
I'm doing great. Thank you. How about yourself?
Wonderful. I'm always excited to be with you both in the studio. So thank you so much. And thank you for coming up with this topic today, because I know that a lot of people obviously have so many questions about annuities. In fact, there was a statistic, if you will, that came out recently where the annuity sales have hit into the 184 billion mark, even if you will, sometimes even higher, depending on what study you're reading. So I have to ask you, what do you attribute the surge to in annuity sales? Ozzie?
So what I do believe is, like, lately what we are seeing it is most of the people are retiring, right? And they're retiring, and if you're not a government employee and a state employee, that you don't have pensions, because like the pensions that we used to have does not exist anymore. And the people are looking some other type of investments to replace this pension. And as of right now, what we are seeing, the only thing can replace the pensions are the annuities. And there is a lot of different types of annuities. So, you know, when the people talk about annuities and they say, like, I don't like annuities, like, you know, like in some cases we don't like annuities also, but we love what they do for some of our clients, because they are looking for a guaranteed income stream, and they are looking for not to lose money in the market. And most of the time, Nick can tell you better, like the clients comes in and they're like upset that they lost money in the market. It's not the percentage, but, you know, they don't like to lose money.
No, no one does.
Nobody does. And it's funny that you were talking about this, because I was just out golfing, as I like to do recently. And I was
speaking, a lot.
I was speaking to the guy that I was playing with. Never met him before. He was retired from the Air Force, and we'll talk a little bit about that as we're going through the shows. But he brought up annuities to me. When I told him I was in the business, he said, oh, one thing I know for sure is I don't want an annuity. And it just goes with what we hear. There's a lot of misinformation. And as Ozzie said, there's a lot of different types of annuities, and we look at them as a tool. I think there's room for everything in your bag, so to speak, if I'm going to use a golf analogy. And it's just understanding why one is good and one is bad, or one is right for your situation. That's kind of what it comes down to, an education.
Makes sense. So let's peel it back a little bit further. What exactly is an annuity? What's an annuity? So
by definition, an annuity is just a stream of income payments. That old-fashioned annuity that this gentleman was referring to is what grandma or grandpa might have had, and you gave your money to an insurance company, and they would guarantee you a stream of income for life, typically. And at your passing, the insurance company might keep that money. But at the end of the day, the definition of an annuity is a stream of income payments. In 2025, and this is probably about 15 years going on, they're different, and there's a lot of different options for them. You can buy them that still provide income, but most importantly, when you pass away, that money goes to your beneficiaries, what we care about. But there's also ones that you use that are just simply for growth. And the bigger idea is protecting your monies from market volatility. That's what our clients really like about them, is when we go through a volatile market, they know that their principal is protected. So they can take risk elsewhere, but they know a portion of their money is not going to lose when we go through a big market drop.
Nick, thank you so much. And Ozzie, you mentioned this earlier, different types of annuities. Can we spend some time where you and Nick can actually discuss what are the different types of annuities?
So I can say the one thing about what Nick just said, the old-time annuities, right? The old-time annuities that, you know, when you retired from the, you know, any kind of places, like they took a chunk of your money and they gave it to an insurance company. The insurance company sends you a monthly check for the rest of your life, right? And in some cases that if you do pass away, then your spouse can get either full or some portion of that income stream. But when the other spouse passes away, the money is gone. So this could be in 10 years, this could be in 11 years. Like you put, I'm making up $1 million, maybe you took it out like $500,000, then you passed, and this is gone. So that's called an immediate annuity. You give the control of that money to an insurance company, and they give you the most of the income you can get.
Okay.
The other part of it is the variable annuities. In some cases, and sometimes it's not great. It's good when the market goes up, it goes up as much as the market goes up, but when the market goes down, it goes down. On the other hand, there is fixed annuities. You go, you give your money to an insurance company, they tell you it's like a CD. You're gonna get 5, 6, 7% interest rate, whatever the interest rate that they do desire, then you will get that, as long as you keep that annuity. Then there's something called the fixed index annuities. Fixed index annuities that you have a floor. What is the floor? Whatever the amount you put it on to an account that you cannot lose.
Okay.
If the market goes up, you capture some of the gains. It depends on what kind of indexes you follow, like details. It's not that important at this second. But when the market goes up, you go up some. But when the market goes down, you don't lose money. Those are the fixed index annuities. But it's good for some people, but not for everyone. It depends on your unique situation.
Okay, thank you. And then Nick, I want to ask you, what is a SPIA?
So a SPIA is the one that Ozzie mentioned. You put the money in, and immediately they give you a payment. So you're not deferring it. So a lot of times we use the deferred annuities where you put the money in and you're going to leave it for a period of time, 5, 10, 15 years even. And your goal is to maybe get income in the future. But the SPIA is you put the money in and they immediately start paying you an income stream. And the reason we don't like that is that if the owner of the account dies, or when the owner of the account dies, there's not any money paid out to their beneficiaries. So for somebody that's not married, that doesn't have children, they just want to maximize income, that very well might be the right decision for them.
Okay.
But that's why that, like we always say, there is all type of annuities and there's all type of investment exists. So when you make a blank statement, it's annuities are bad, then I'm going to say, if they are bad, why it's been selling?
That's true.
And why is the biggest companies are the life insurance companies, which they have the best ratings, and they are the one who's providing it. Like the SPIA is not great, but I met with a gentleman, I think like last year, and unfortunately he has not married, he has no kids, he has no brother, he has no one, and he has a chunk of money, and he wants to live the rest of his life that's as much as possible income he can create. And the SPIA is the one and only going to give him the maximum income that he knows that is going to come regardless what happens in the market.
Amazing. So again, when we get back from the commercial break, we're going to talk about how you help determine which annuity is right for each client that comes in. But before we do that, Ozzie, you have a very special offer you'd like to present to the viewers at home today.
So if you do call, the number that you're seeing is like 833-308-5200. You're going to meet with, either myself, Nick, or one of our team members, and we're going to go through your portfolio, and we're going to review this portfolio. Also, in the meantime, that you're going to get, my book is the Income Solutions for Your Life. Then we will go through your income, and we're going to map out your income for the rest of your life, showing each and every year how much income you're going to get. 833-308-5200.
Ozzie, thank you. Nick, thank you. So to our viewers at home, that number to call is 833-308-5200. Again, 833-308-5200. Trying to get the English version out of that today. We're talking all about annuities. And how do you know if one is right for you? Well, that's what today's show is all about. And don't miss the opportunity to come in for that complimentary report and meeting, if you will. That number again, 833-308-5200. We'll be right back after this very short commercial break.
Everybody in my family is in medicine. So my parents were both doctors, my brother's a doctor, everyone in my extended family is in medicine. But science was never really my thing. I was always about numbers, and money was always really intriguing to me. I went to University of Maryland. I was economics and finance, and I was fortunate enough to work for one of the big box retailers in the insurance advisory world right out of college, and that's where I met Ozzie, and that's how I got started as kind of a new guy in the business. I kind of learned the ropes there, but it became pretty clear in 2014 that we wanted to go independent and have a little bit more control over how we deal with our clients and give them good advice. There's no feeling quite like watching your clients get to do everything that they wanted to do. Work doesn't feel like work to us. We get to help people plan for their next phase of life. Being able to help people do what they want to do and being able to make a pretty good living out of it makes it all worthwhile and truly fulfilling for us. It truly doesn't feel like work.
Welcome back to Retire Smart Maryland. My name is Cynthia DeFazio, joined today by Ozzie Culhagil and Nick Innerbichler of Elite Income Advisors. And we're talking all about the world of annuities and how do you know what the right annuity is for your retirement plan. But Ozzie, before we dive back into that, I do want to spend some time talking about the book that is on the desk. And obviously we talked about it before we went to the commercial, but really take some time talking about it. Why does everyone need to have that book?
So I'm glad you asked because a couple of weeks ago we have a new client, husband and wife. They just came in, and he read the book, and he had questions. We answered it, and he was also looking at our schedules to go to the couple of the seminars. And he says like, "Hey, can I see the slides of the seminar?" I said, "Look, let me tell you what it is in the slides of the seminar. Whatever you are going to read in this book." The first, I'll give the examples of what I had seen in the last 20 years doing this business, like, working with my manager, working with my clients, like what did I see that some of the people are failed to doing it. And I did explain that it's all about retirement income. It doesn't matter how much money you do have, it's all about how much income you're going to get when you do retire. Because when you stop working, the paycheck stops. Then you need to create your own paycheck. And I'm talking about the paychecks, I'm talking about the taxes, I'm talking about the long-term care, I'm talking about the life insurance. Everything that the retirees needs to know about when they do retire, what kind of things that they should be looking for. Which all it's in the book, and whoever is giving us a call, come and see us, they are going to get one of the book.
And real quick, it's his book, but with Prashant's book, with Ozzie's book, and everything we do, it's about simplicity. It's about making everything easier for people to understand. And we talk about income so much, and it's not about how much money you have, it's about how much income you need. We just preach that every single day. And these books are very easy to read, very quick. It's not War and Peace. It's a really great tool for you to learn more and be prepared when you're working with us on your plan.
Absolutely, and it all comes down to proper planning for retirement because like you said, Ozzie, once you retire, those paychecks stop. You're responsible for actually paying yourself. You need to know where that money is coming from. And speaking of that, getting back into the world of annuities, because obviously so many people have questions about those today, how do you help determine the right annuity for each client that's coming in? I know that there's the portfolio review, but Nick, talk a little bit overall about how annuities fit into people's retirement plan, if it's applicable to them.
Yeah, so we've talked for years about the idea behind having a bucket approach, right? So you have money in the bank, you have your cash, your CDs, you have money in the market, that's the red bucket, and then the green bucket is where we typically like to use an annuity. The idea behind that is that you don't have all your money in one thing. You protect the principal of some of your money when markets go down. But the idea is that you find during the planning process what's important. Do they need income? As Ozzie said, where we are, there's a lot of pensions from the federal government. My wife works in the school system, so she has a pension through her time there. But there's a lot of people that do not have a pension. So if we're putting together an income plan for life, do they need to fill in a gap within their income with something like an annuity? If they have all the income they need and when one of them dies, the same income is sustainable for the rest of the survivor's life, then maybe they look at one that's specifically geared towards growth or accumulation instead of one that has an income payout to it.
Okay.
And that's the thing that I like about the products that are available today. The solutions are that there's not one that is a cookie cutter approach for everybody. Today, there's actually ones, and I love these, that will give you almost like a long-term care benefit off of your income. So it's not just income, it's not just growth, but something like a long-term care insurance policy that the income will provide for your care if you need assistance with 2 of activities of daily living. So I really love those as a new introduction to the marketplace, but there's not one right answer, but it all depends on the plan and what we're needing to put as a piece of the puzzle for you.
Nick, thank you. Ozzie, what if someone bought an annuity, I don't know, let's just say 10 years ago? How do they know that that's still the right product for them? What kind of answer would you give that client coming in?
The first thing I ask them, can you please bring me a statement? Let's take a look at it. Let's review what you have. Because if somebody bought any kind of annuity, it doesn't matter like what kind of an annuity, it's like more than 2-3 years ago, the interest rates were so low back in the days. And now it started to, going up. Just giving an example of the mortgage, right? The mortgage rates used to so high, but we still have to buy houses. And we bought the houses and the mortgage rates, went down. And what we do?
Refinance.
We do refinance,
Absolutely.
right? Because we want to get the best out of it. So we want to pay less interest rate. So we refinance the house with the lower interest rate. In the same thing with the annuities, you bought it when the interest rates were low. So the rate of returns and the fixed interest rates are low. But now the interest rates are really high. So the annuities today is giving best opportunities for the clients who didn't have this, 5, 6, 7, 8, 10 years ago. That's why it's really good to know that what you have and just bring it and we can review it and we can tell you if it's good or if it's bad. Because, Nick sees these people a lot and, he can tell you that, oh my God, this is really great. There is nothing you should be doing it, and you should just take the income for the rest of your life because that's going to be the best interest you can ever see.
Okay, all right. So really it comes down to determining someone's need for the annuity overall. Would you agree with that statement, Nick?
For sure. I mean, it's just like anything. You can't put together a portfolio without knowing what's important, what kind of risk tolerance somebody has. And if you are looking at somebody and their situation almost requires an annuity, you have an obligation to fill that piece of the puzzle for them. So again, whether it's I need more income, I want to make sure that when I pass away, because I'll give you an example. We have clients that have passed away and they elected their pensions before they came to meet with us. And they may not have elected the highest survivor benefit for their spouse. So we know there's a 15 or a 20% drop in their income when the first person passes away. So filling that hole of 20% of the income with an annuity that provides income is an ideal or an optimal way to help them know when the spouse is gone, their wife or their husband or whoever is going to be okay. They're going to have the same level of income. So it's not as a science, but we always want to use the income for life plan to make sure our clients know in black and white, what is the income today, what is it in the future, and what happens when one of us passes away.
What types of questions can people be expected to hear from both of you when you're trying to determine that? I'm just curious, because I know the viewing audience is probably wondering, what do they ask me when I come in for the first time?
Most of the time, the people comes in and they say, do we have enough?
Yeah.
And what is enough? And sometimes people say, where am I going to get my income from? Am I going to take it from my 401k? Am I going to take it from my IRA, Roth IRA, or bank? And that's what we do. We sit down and we analyze everyone's income first. You retired, where is the income is coming from? We still see pensions, and obviously there is still Social Security. So that's part of our income is coming from that. But we still have an income gap. How can we close the income gap? That's why me and Nick, we sit down, we look at everyone's plan, then we say, okay, this is your income report and this is your gap. How are we going to close the gap? And most of the time, the people don't know how they can close the gap.
Yeah.
And what we like to see is the people needs to get the income they want, then they can enjoy their life and they shouldn't be really worried about what's happening in the stock market.
Ozzie, thank you so much. Nick, thank you so much. To our viewers at home, there's a number for you to call on your screen. That number is 833-308-5200. If you're in the viewing audience today and you're asking yourself, has anyone taken the time to ask me these types of questions? Do I know what my retirement plan looks like? Do I need an annuity? Should I be talking to someone about getting one? This is the perfect opportunity for you to call in and take advantage of this complimentary consultation. That number is 833-308-5200, or if you're rushing out the door, we've made it even simpler. You can grab your smartphone, click on that QR code at the bottom corner of your screen. That takes you right to the landing page of Elite Income Advisors, and you can claim your spot accordingly and receive a copy of Ozzie's book. We're going to take a very short commercial break. We are uncovering the world of annuities even further when we return.
Do you own an annuity? Are you aware of what type of annuity you own? For years, annuities have been a cornerstone of retirement planning, but they're not all created equal, and your current annuity might not be serving your retirement goals. The good news is rising interest rates could mean better guarantees and better benefits for your existing annuity. If your annuity is not working for you, when would you like to know? Call now for your complimentary annuity review.
Welcome back to Retire Smart Maryland. My name is Cynthia DeFazio, joined today by Ozzie Culhagil and Nick Innerbichler of Elite Income Advisors, and we're talking all about the world of annuities. Why have the sales skyrocketed so exponentially? Well, that's what today's show is all about. We're going to help you understand what they are exactly. And speaking of what they are exactly, Nick, I should ask you, so often you hear people that say, you know what, I signed up to go to a dinner seminar. I went to a dinner seminar and I just got sold an annuity. I have no idea what it is or how it fits into my retirement portfolio. I'm not even sure I understand it. Nick, how do you help people understand exactly what type of annuity it is that they own?
So Ozzie mentioned in the previous segment, starting with a statement, right?
Okay.
So looking at what it is, and we can very quickly understand the tax qualification, whether it's an IRA or an after-tax annuity. We can understand that it's a variable annuity versus a fixed annuity or a fixed index annuity. But that's the starting point. But we do find in everything we do that there's a lot of a lack of education, I think, a lack of understanding of what products people buy. And when we do this, when we present an annuity, we, again, try to simplify the process, but we want our clients, our prospective clients, to know the ins and outs. What are the pros? What are the cons? Knowing that specifically if I put money in, we talked about this earlier on, if I put money in and the market goes down, my principal is protected. That's one of the biggest key benefits to the products that we offer today, is that when we have a volatile market, and I think there's volatile markets all the time.
Absolutely.
Like if we look back in history, whenever we have a situation come up and people contact us and they say, oh my God, it's the end of, everything is going to whatever. So for us, think about history.
Yeah.
We see market volatility all the time, whether it's the news, whether it's a presidential election, whether it's the, whatever, interest rates going up, interest rates going down. So principal protection in volatile markets is a very key part of all of the plans that we put together.
Okay, and annuities help that overall.
For sure, yes.
So on that same vein, when we hear Ozzie people say, I hate annuities and you should too, like the commercial, what type of annuities are they speaking of specifically that they just have a terrible overview of them?
Again, most of the time the people do not know what they own, right? Like if I give you an example, there's a gentleman came in a couple months ago and he has an annuity. It's been sold, I don't know, like 10 some years ago. And they told him that, hey, 12 years later, you're going to have an X amount of income. And I said, like, are you going to have that? I don't know. I said, like, okay, let's, make a phone call to the company to find out what you're going to get. And just for illustrative purposes, they told him $1,500 a month, they're going to take an income. But that was, 10 some years ago. And today they say, like, well, the market didn't perform what we were expecting to perform, so you cannot take that much, you're going to take $800. And obviously, this gentleman was not happy because he didn't know exactly what he bought. In that case, this was a variable annuity and it didn't perform. It doesn't matter what type of an annuity, but that was not the right annuity for him. And now he's looking to get a $1,500 a month income. So how can he make a situation better to get this annuity work for him. And that's why it's nice to know what you have. But when the people also says that, I don't like annuities, everyone talks different things on different, versions of it.
Yeah.
And some, like we say, there's an immediate annuity exists for the people who needs that income. They cannot live out, and they don't need anyone to leave money to. And there is fixed index annuities. You can't lose money. If the market goes up, you capture some of the gains. But I'm going to say again, if they are bad, why the biggest companies in the world is selling them?
That makes sense. That makes sense. So a variable annuity is based on market performance, company performance. What is that?
So the variable part of the word variable annuity means that the performance varies depending on what the market. So you're investing not directly in the market, they call them separate accounts, but you're investing into the market through what are like mutual funds. So when the market goes up, you can capture all of the upside. When the market goes down, you can lose as much as the market. So there's not a lot of principal protection in variable annuities. The other thing about them is they have typically higher fees than even your traditional mutual funds. So variable annuities, I think, are the ones that I personally, and we've sold them in our career. We worked at one of the big box insurance companies earlier in a career. I understand why people want them. You want to maximize the growth. But for us, the fees, the loss of market when the market goes down, those are things that are just not attractive to us.
Well, especially in the retirement years, right?
Correct.
And again, everything has a purpose in the life, right?
Yeah.
It might be good for the people around the 30, 40 years old. There's also a difference, is like the annuities, sometimes the people use for, tax shelter. So like if you put that, the money that you pay taxes on into an annuity, and if it grows into an annuity, that you don't pay taxes until you start taking distributions. So for that reason, like he says, like it can be used for some specific, people for that purpose. That doesn't make that annuity a bad annuity. It's just needs a purpose. You have to find the right person to use that annuity.
Okay, that makes perfect sense. So really all it comes down to is proper planning and seeing if an annuity is a perfect fit for someone that comes into your office by asking very important questions.
That's right.
All right. To the viewers at home, the number to call is on your screen, 833-308-5200, 833-308-5200. How do you know if an annuity is right for you? Well, pick up the phone and call in. Schedule that consultation, 833-308-5200, or click the QR code at the bottom corner of your screen. Be safe, be happy, and be blessed. We look forward to seeing you back 1 week from today on Retire Smart Maryland. Take care.